And then I will share the screen and I will try to, let me see, share everything. And let me try to get to this graphic. Where's the graphic here? Um, Unlocking video room. Unlocking beyond five final decisions. Okay. Let's get into this and see if I can actually. Okay, I'm going to start with a really funny one here that you're going to love. Check this out. These are sliders. You know how our friends all love sliders in this class? I really,
Right.
you can see that, right?
Yeah.
Yeah. This is so cool because it's in it's a book I love. It's called the Decision Quality. And what the point is made out of this is that if you have one slider that's a high commitment to action, that's like it doesn't have to be good, it has to be Friday. And he said, yet your relevant and reliable information is down here. He said, you're never going to get decision quality. And
Right.
it keeps reminding me of you because, if you don't have the right information and the quants and you haven't gone back into the financial information, you're not, even if you're really committed to the action, you're not going to, your slider's not going to be set in the right place.
Yeah.
When I saw that in the book, I cracked up at it because I thought it was so cool because we're using all these sliders and stuff. So
Well, that's true. And let me add a little texture to there. And
please.
this is editorializing, but I think it's true, which is why, like, the more capable and aware you are, the more paranoid you get because you will always be concerned about what you're not seeing and understanding.
Wow.
It's the people that have a superficial understanding of a thing are the ones that think they're right.
Ah,
The, pe- the
interesting.
people the people that get out in the world and they realize that how complex the world is and how all these moving parts, they're always worried about, well, look, I think this is true, but I can't validate it. How much weight do I want to put on a decision that uses this piece of information? And so you almost have to coach those types of people through the paralysis by analysis, because
Yes.
you will always be looking for more and more and more, but at some point, and the simulation actually is a good exercise, you've got to pull the trigger. You have to make a decision. You
Ah,
cannot wait
yeah.
until everything is known, and you will
Yep.
always be making decisions with known unknowns. And so, it's one of those balances. And so make sure that you go after key information and do everything you can to validate the veracity of that information, and
And
make sure
then
you
make a
know this is
decision.
good. And
Yep.
then you got to make a decision, and don't be stuck being like, oh, what about this? What about that? Like, at some point, there's always whatabouts, but you've got to be, you have to have your head on a swivel, but be okay to make a decision. So,
Well, you're talking a little bit about humility too, because we had at GE, we had a saying, there was an old guy that used to run the place and no one wanted to backbite. So they called him Spike or something, some fake name. But the Spike's main characteristic was often wrong, but seldom in doubt.
yeah.
So it's like, don't be a Spike because, you should be doubting a lot of stuff. All right, let me jump quickly into this one. This we talked about a lot, the LOI, lost orders over inventory, and they become my favorite metric. I just love it. I've worked with the folks in Renault and all over there. He keeps sending me all these emails now about this. He's like, "Are you trying to decode this sim?" It's like, no, I'm not. It's just a matter that I see all the metrics with this. But what it really does is that, and this is the whole data visualization thing, is that in this whole sort of lost order over inventory, the what I've been trying to teach, and as they look at this, and I show them kind of the different image, what have you, and then say, here's where you're having a problem above or below the line. But the way it works is that it's all zeroed here, and I'll show you another one in a second. But what's interesting about it is that it's just a fraction, and only when you see a graph and you have it indexed at 0, the numerator's on the bottom and the denominator's on the top. And I just try to teach people that look at it that way. It's the
Right.
lost order over your sales or inventory. But what I'm trying to train them is that when you see this graph and you see red team here, they have a huge inventory problem because you need to be in the middle of 0. You want this
That
gap to be closed to nothing, the orders there. So when I take them through this and I say, take a look at your decisions, and if you're going up like that, you have, the numerator, the denominator, you have a huge amount of inventory building. If you go way down there, you're losing a ton of orders because you're getting all these orders, but you're not delivering. You can't because of you can't deliver
Right.
because of your capacity. So this balancing, and this is just kind of taken, taken from the ones that they teach us, and the things. It's like supply and demand, and you got to look at your growth, and then but what is your investment aid in your plant, your equipment? And I've told them many times what you've told me, that sometimes it's worth paying your depreciation capex off, but then making a few expensive cars and then leaving that alone, because that's a line that you don't want to go after. And they see this sometimes in in the competitors with some other people, where their inventory is building up here and then they're dumping it. And so I think that was a great part of the video that they really liked, because a couple teams actually jumped up 2 places because they decided to do that with their plants. They said, okay, we're not going to do this where we're investing and then trying to build something that builds inventory, but we can't sell it.
Yeah, and it's a team in a universe. A team in a universe that's not controlling their inventory becomes a problem for everybody. They should be sending each other remote emails at night saying, "Sell your damn inventory, will you?" So we could get on to the competition. All that is overhang that someone's going to have to liquidate. And so, yeah, you've got to, the key that this is the most fundamental key to this game is produce. If you can produce exactly how many you sell and you can sell them profitably, you're probably going to win. And you don't want to
Yeah.
overproduce, and you don't want to overmarket for what you're capable of producing, including your competitors.
Well, I just pulled the 4 out here to show kind of what happened with our teams through the whole thing. We're at the end now. We're at the last discussion, but it's really fascinating to pull one of these out, each of these out, and see, like, purple team has, and I can look at the rankings and kind of, say, how has people ranked, and how does their LOI, how there's lost ordered over inventory, predict how they're going to end up in terms of the ranking. And it's amazing, Paul, because yellow team, who's consistently done well,
Uh-huh.
as the closer you stay to zero, that you're closing that gap between orders and sales, and you're really doing a good job of balancing out, your inventory, and you're not building it. If you're pushing up here like purple has, you're building a ton of inventory that you're not selling, and they just went ramp like that with low cost. So you can kind of look and see, okay, which were they picking on for each team, and how did they do by building inventory but also capacity. And it's interesting because yellow and blue, now what happened with green, it's amazing, but if you look at the 4 lines, green jumped from the last for a bunch up to number 2, and they are now when you look at the standings, they're now number 2, but yellow has consistently stayed fairly center around zero. They balance the inventory with their sales, and they balance the supply with the demand. But there's a
Right.
couple places, which was interesting, where they stumbled, and then green saw that and jumped in and said, that might be a line that we want to, get involved in, because it's, whoops, let me get this back down to smaller. Let me show you this one. That's eco-friendly. So you can see this is where we started getting to a problem with lost orders with yellow.
Right.
They had a little bit above here, but then they invested a big time in eco-friendly. Luckily, the sales weren't that big, but this is where then green started jumping up, and the 2 of them now are, it went yellow, purple, red, green, blue, and then by the 3rd decision, it was yellow, green, red, purple, blue. Blue was still almost on the bottom, but green jumped up from the bottom to the 2nd place. And I could follow the numbers on their financials and summaries, and it all said the same thing, which is they balanced out their supply and their demand, which is like just amazing, that how important that is. And I know you love ARE, so I'll put the ARE in here too. But the other thing that I find that's interesting, these are the kind of final standings, and you'll see what I meant by green here. where they took that plunge and then all of a sudden they balanced that 0 point and they've been consistently. But look at yellow. Look at these guys.
Yeah.
That's a team that's like I would be envious. It's like, how can I get on the yellow team? And they're all saying that same thing. But
Steady hand, steady hand.
isn't that it is amazing. They've been consistent and they have stuck with, their family and their eco, and they've made mid-course adjustments. But the annexes were so important in the logbook because it's as you said, if they don't look at why they're doing what they're doing with the annexes, they're not going to be able to do mid-course corrections right when they're in the middle of it, because they won't know why they made that difference or that mistake. So you saw the settings and identical. The ROS is almost identical, and the movement of their position is almost identical, and so is ARE. So but if you look at that inventory 0 point, and then you look at ROS and your ARE, they're both really good predictors, which is then on their feedback, what they're saying is, we really started to get this when we started to look into the financials, because that, and it's like, people, you can't make me happier.
That's the game, right? You got to control your balance sheet,
Yeah.
and you've got to figure out how to sell your stuff. And yeah, it is the financial, it is a game based on that. And it's interesting in a corporate finance, that's also how corporate finance works. And you know this, and I know this, but when you're on those earning calls, I mean, people make billion-dollar decisions based on what it's going to look like on their income statement, balance sheet, based
Yeah.
on
Yeah.
based on what the accounting requirements are. And so people want to know, can we expense this? Can we capitalize it? Do we have other income we want to offset? So people make huge decisions based on accounting treatment. And it all ends up on the balance sheet income statement, and that's what you have to try to figure out and manage, because that's what all the Wall Street analysts are just looking at your financial statements, trying to figure out what are these crazy people doing, right?
Yeah, I mean, it's amazing to me how I watched them go from the marketing and the engineering sliders, and then seeing like, well, look how that really does affect the budget, does it not? It's like, yeah, it really does affect the budget. It's like, that's kind of the whole point of it, is that if you're seeing how it affects your budget, and then you're moving that into your decisions, then you backed into the financials, and you can get any of these comparatives with your competitors and see where is their strategy and what are they looking at. And that seems to be where the really successful groups do it, because they then end up being aware of where their competitors are targeting, and even and can say, let's go after them there, or let's avoid that.
That's interesting, and hopefully you get some feedback that will allow us and to understand like where the insight comes for the students that are taking the class. If they share that input with you, like, hey, it was when we figured this out,
Mm-hmm. Mm-hmm.
and so those are the kinds of things that we could build in, or at least use earlier in the class to try to let, because it would be generic, it'd be for everybody in the class,
Yeah, well,
right?
that's what they seem to be doing in the AI papers. I mean, they are really comparing their annexes, because the way you asked those questions is you said, I'm trying to think of how you did it. It was really interesting. It was why did you change, and what did you change, and what made you change? And they're saying, okay, here's where, and it's really about vision and missions and values, but they actually got into the nitty gritty and said, this is we looked at competitively, and this is why we decided we had to change, because this is where we were going to have to target that wasn't working where we were going with eco. So those papers, I think, will be really good. I hope that they keep up that, that idea, because that's what they saw as the reason and the way they were doing the papers.
Yeah, well, and it's also part of the big picture of the class, is that even if they made the changes on the fly, because they made competitive changes because of pressure, but they still need to slow down and understand what are the values of your company? What have you promised to the stakeholders? What does your board of directors think is happening?
Right.
You don't have, just because you're the CEO doesn't mean you can do whatever you want to do. You still have to attempt to go back and square the circle. You've got to say, okay, the world is changing on us. How are we going to manage this? We have to react. Should we react? Is there a short-term price? Do we need to change our mission statement? Do we need to change our strategy? How do we do this? And so, with any luck, there's a lot of learning how all these things fit together. They're not just decisions you make annually and whatever happens, happens. They're decisions you make because you're running a certain kind of organization and your stockholders are expecting certain results, and your stockholders that are into whatever you're into because you put it on your mission statement and will expect you to operate that way too. And oh, by the way, if you don't do it, you're going to pay the price,
Oh yeah.
because the people are going to come up and say, hey, but you said you were all about this, what are you doing that for? Right. And so
Yeah. Yeah, that's what I'm doing a lot for Decision 5 in the final paper here coming up is saying, let's see some cool data visualization. Let's see some great graphics, and let's explain what you tried to do, what did work and what didn't work. Pat yourself on the back, but also say, I'm taking responsibility because I was really wrong here. And it's what's the evidence? Why were you really wrong? And if you want to take responsibility, don't just say, I don't know, we were too random. It's like, what did you miss or what did you see? And they're seeing that so much more now. I mean, they're they're seeing
yeah,
it. I mean, I've got data they don't see, and they're still showing me surprises. They're saying, "Hey, did you see this that Yellow did? Because you mentioned they were building inventory there, and you told all of us that, and we were worried about this price change, but they smoothed it out by balancing out and not making as much that next time." And I said, well, yeah, that was what Professor Paul told us is like back down on your manufacturing if you're just selling to lose money. And that, I
right.
mean, that's what they were basically doing. And now they're roast and we actually have, I think there's only one yellow that's got into accumulated ARE, retained earnings,
It's
where they're
hard.
actually getting positive. Well, this is a turnaround. I mean, to me, this is
Yeah.
Sam's Club. I mean, and as I'm looking at these and the numbers and saying, in euros or whatever they are, it's like they're deep underwater
Yeah.
starting here,
Well, that's right. That's right. And that's why they have the chance to take over the company. It's a
Yeah,
turnaround.
yeah.
But I ask my students after every semester, should we figure out a way to make this easier? And they all say no.
Oh,
I've
yeah,
never had
yeah,
any of them say no.
yeah,
I,
yeah,
I, they're the chips are down. They were
yeah.
hired to come in there and make tough decisions, and you got to make those tough decisions. And right. And I also, by the way, for what it's worth, and you can cut this out of the video if you don't want your students to see it,
That's okay.
I always tell my students, like, you get a better grade from me when you make a mistake and you own up to it and you know why and how you're going to do something different next
Different
time.
next time. Yeah. Oh, that's awesome.
That's way better
Yeah.
than saying, "Oh, this didn't work." Like, who cares? You sound like a complaining 2-year-old. Like, I don't care. Like, hey, if this were the situation, you made what you thought was a good decision, it didn't work out. Why didn't it work out? And then be loud and proud and understand it, understand the nuance, and then use that in your presentation. And if you start operating that way, people trust you in business. People will trust you when you own up to your, like, hey, we should have seen it, but we didn't. That's the way you want to operate, not make
Yeah.
excuses and blame somebody.
Well, your teams are more, I don't know what to say it, but more mature in terms of wanting it not to be made easier because they can see that tough things are a better challenge because my teams are more like, well, no, if you made it easier, you'd make it easier on yellow too. And we don't we don't want that. It's like the difference between Aikido and Jiu-Jitsu. I always tell in Aikido, when you're hurt and you're twisted, you put a little red band there so that they don't hurt you more when you get twisted and hurt. My Jiu-Jitsu, my Brazilian guys say, are you kidding me? That's what we'd go for. Saw a red mark. That's where we try to hit them.
Yeah, that's true. That's true. Well, yeah, but in what I did this semester, this last semester, is I gave my students more points if they improve their accumulated retained earnings, which is the most
Ah,
holistic number on there.
oh,
So,
it is.
you
Yeah,
know,
it's hard.
that
It's hard.
includes
Yeah.
that includes everything. You got to manage your income statement, you got to manage your balance sheet.
Hmm. Hmm.
Actually, you can't just sell plants because in the 15-week game, you can sell plants, you get mergers, you have all kinds of
Yes.
other things. you can't just create cash flow out of nowhere and say that you're doing a good job running this company. You actually have to generate revenue and bring it to the bottom line. And so that's what makes it particularly hard, is that
Yeah.
they may be winning, but they're not improving their company's retained earnings,
Right, right. It's so hard. I
which,
mean, they said they did better because it's less negative, and it's like, well, okay, I'll give you that, but still,
yeah,
you're still
that's right.
underwater.
You're still underwater. That's right. And the good news is, given the circumstance of your competition, there's only so much you can do, right?
Yes.
If
Yeah.
if
Yeah.
all, and that's
Yeah.
something that you
Yeah.
need to recognize as a
Yeah.
facilitator. If everybody else is giving their cars away, all of them, and the yellow team is still losing money, but they're winning, they probably did a
Yeah.
heroic job getting to
Yeah.
that point because everyone
Yeah.
else is giving away the shop. And
Yes.
so
Yeah. Yeah.
we don't want to hold the fact that the other teams are not creating a conducive environment to profitability
Yeah. Yeah.
against all the teams.
Yes.
But
Yeah.
that's
Yeah.
something we want to remind them, like, you need to look at your competition and make sure everyone here should be making money, right? Everybody. If you're doing this strategically, you all realize you need each other as good, righteous competition, and you want to compete, and you want to compete for the most gross sales, but you're all profitable, because if most of you are not profitable, it means your industry is going away.
Yeah.
The
Well, I
investors are going to divest from your company, and all of you are going to be out of a job. No one
yeah.
wants a car anymore. If no one's profitable, no one wants a car.
Well, I mean, I'm coping with that in our doctoral program because there's a whole lot of the students that are extremely sort of left liberal, not, I wouldn't say socialist, but we're got a doctorate in business, and they're sort of, some of them are anti-profit and anti-money in some ways, the triple zero stuff and all that. And I'm all for the environment and that, but I think the light bulb went off as we were having one discussion, and just some old guy brain thing. I said, I heard one time that something that's important to this, and that is all profit is a future cost. And if you think of profit as a future cost, you're not gouging, you're planning for a future, and there's gonna be a lot of changes. And if you don't have anything behind the clock, you're not gonna exist anymore. So it's planning for the future financially by being sound and saying, let's set a little bit away and have a way to weather whatever storms come, because there's always going to be those ups and downs, they're
Well, yeah, and this is, not nothing to do with this class, but a big picture thing. We're living in a time where debt financing companies have to give away their balance sheet because they can't make 12%. They can't beat
yeah.
inflation. They
Yes.
can't beat
Yes.
monetary inflation. And so
Yes.
going
Yes.
out, they're doing stock buybacks, they're
Yeah.
doing crazy merger deals that make no
Convertible debentures. Yeah. Yeah.
crazy stuff,
Yeah.
because the macro environment that's way bigger than any company has
Sure.
created one where literally no company can sit around with cash on their balance sheet. They have to either give it back or, die a slow death or something. It's really crazy. It's really a challenging time,
Oh, it
I
is.
think, to be a CFO or to be operating in the wider world. Really interesting times.
Well, we're old enough to remember inflation, and most of all those young folks haven't had to live with it at all. But I mean, I just told them the old business school, it's more dollars chasing fewer goods. Either you got supply issues or somebody's printing money in the basement, and so you're going to have the inflation. Then what happens to the weighted average cost of capital? Everybody says, "I'm going to buy a bond. Why do I need to invest in your company? If I can get 18% back, what are you going to do?" It's like.
No sophisticated investor needs the CEO of a car company, for example, to be investing the, the treasury of the company in a 5% bond. I mean,
Right,
give
right,
me the money
right.
back. I'll invest my own money.
Yeah,
I'm paying
yeah,
you to make money in the car business. I'm not paying you to invest the money at 5%. And there are very few businesses that have opportunities that yield more than 5 or 8%, given the
yeah, yeah,
competition, given the
yeah.
challenges, global challenges.
Oh yeah,
So we're in for a big shakeout, I think.
yeah,
It's come.
yeah. Do you see your teams borrowing money almost every period, or do they do a lot of borrowing on your teams?
uh, no, every once in a while I'll have a team that'll borrow consistently. Most of them don't don't. most of them, the way the game is structured now, are not in a situation where they can borrow and deploy money
Ah,
at a higher rate than the cost of interest.
yes, yes,
Although I have had two teams that I can think of in the 30 or 40 teams that I've run through in the last couple of semesters
sure.
actually had created by decision 5 or 6, because I go a few decisions longer, they had
Yeah.
created a flywheel where they could borrow,
Oh, yeah,
deploy
yeah.
profitably in one of their business units at a return higher than the cost of capital.
Interest. Ah,
In
very
which
cool.
case, their stock price goes through the roof because
Right, right.
they're now doing what everybody that invests in the company wants them to do, which is to make a lot of money, borrow other people's money. We're the equity, go borrow debt, deploy it so that we get the leverage benefit.
Ah, well, you know, they put a little bit of negative saying, you know, your leverage gets up to 85 to 100%. It's going to be 8% versus 4 or whatever. They have a little scale there, but our teams have consistently, I think I maybe gave the wrong signal because I said, make sure you all borrow 2 grand. I don't want you running out of money, but I didn't mean every decision. So I
No,
said,
no,
just the first
no.
time. And so some of them did a couple and then said, well, we're going to pay it back. And I said, well, your leverage isn't that bad. You got a huge amount of revenues. You don't have a lot of profit, but look at your capex. Maybe you want to invest some of this in plants rather than paying the money back, depending on what's the return either way. Good. Do your own IRR and figure out which one is best. So,
That's it's interesting, and you think about it this way. Now, the mega people told me, tell your students to borrow max decision one.
sure,
So no
sure.
matter who they were, they could be running this through the CEO, the C-suite of a public corporation in Europe. It doesn't matter. They tell them all the same, borrow $2,000 because you may need it. Okay. And so that's always out of the box what they suggest you to do. But if you're coming in to turn around, because this is clearly a turnaround situation, if you're coming in to turn around a company and this, in the year 2, year 3, you're giving money back, that means you're already tapped out. You're going to fail.
Yeah,
Like,
yeah,
nope, that
yeah.
doesn't make any sense for you to
No.
be, hey, you get to turn this company around in this highly competitive environment, and your solution as an executive team is to give people their money back. Like, no, you need to be finding what is the best way to deploy these resources we control now so that
Yes, yes.
by
Yeah,
decision 4 and 5, we're making money. So,
yeah,
generally
yeah,
speaking, it doesn't make sense to pay off that money. I mean, and the teams that get way out of some teams get that can't control their inventory end up with huge problems. They get government bailouts and their loans, their leverage goes through the roof. I mean, they're in deep trouble
yeah, yeah,
and they may not get out. But for most competitive teams, it just doesn't make sense. I haven't seen a lot of reasons why you'd want to pay off a loan until maybe in your
yeah.
last decision to
Sure.
say, look, we've got an extra $4,000 here. Let's pay a little loan off. If we're in a situation where we have a positive retained earnings, we can
Retained earning,
dividend,
bounce it up if we're close. Yeah, yeah,
play a
yeah.
little here and a little there and
Sure, sure.
see because I encourage all my students to game the last decision.
That's what I was going to ask you. That was my final question is like, we're into decision 5 now. Give us some wisdom. That's interesting.
Game the last decision because you're
Interesting.
all going to go out with a bang. Okay. You're all
Yeah, yeah,
retiring. Every
yep.
student is going to retire in your company. And so what you want to do now in the real world, I tell them you wouldn't do that. You wouldn't leave whoever's taking over the company with an
With a
empty box.
mess. Right. Yeah.
So, but this is for fun. All the things you wanted to try that were afraid to, particularly if you're in third or fourth place, like, you know what?
Yeah.
Katie brought the door, baby.
You may
Try
get up to
something
2 or
great,
1. Yeah. That's
have
cool.
fun with it and see what
Yeah.
happens because it's just a game. And so
Awesome.
play game it a little bit, see what you can do, but I do tell everybody you do not want to have now in your case you can't sell a plant.
Right, right.
In the longer version of this simulation, they can sell plants. And so what I say is you want to make your balance sheet as skinny as you can. So you don't want any inventory that you are not really sure you can sell
Yes.
because that will just end up dragging down your ratios. Okay. So you don't want to do that, if that makes sense.
Yeah, that's really
So
cool. That's awesome. Yeah, I
so
think there's
that's
a
the
couple teams that are in that situation that have bounced up and down. And I know one in particular that is really going to take some risk because they're breathing down the neck of yellow and no one's been able to touch them. And they're close enough, I think. So, but I won't give advice to one without everyone. So they'll see yellow will see what's coming, I'm sure. But
And realize, so like if I don't invest in depreciation for my plant, for example, that creates some headwinds because the employees find out about it, productivity goes down, et cetera, et cetera. But if you're in third or fourth place and you don't need to produce all the cars your plant can produce, who cares about your employees, right?
yeah, yeah, yeah.
Don't make
You
any
got to
cars.
do it. I know.
Don't make the cars. Let them complain. Don't fix the equipment. Don't invest in depreciation. Now that's one of those things in the real world I wouldn't tell people to do. Like
Sure,
you got to maintain your plant.
sure, sure.
Game, and in the game, you don't want to take money that you could do something that will help one of your six winning metrics and deploy it in a way that will not help you. And so this is where it gets to be really strategic because they may
Ah,
see we're really close. We're third, they may be first, second, third, fourth, depending on the metric. But
yeah,
they'll look in, they'll say, we're really close to the yellow team or the blue team on this one metric.
sure.
What decision can we make that will help us flip that
Pushes
team
over that metric. Yeah, yeah,
just for that one metric? And so you have
yeah.
to numerator and denominator for each of the metrics, for each of the winning
Yep,
things,
yep.
and decide what to do. Now, if you've got a team that's winning on CO2 emissions, for example, and let's say you don't sell any cars, well, they're probably going to go down on CO2 emissions because they're going to sell a bunch of cars and you're not. So
Yeah.
your CO2 emissions will get better by virtue
Yes.
that you haven't sold any cars. Okay.
Oh, that's great.
So some of these things are a little bit counterintuitive, but if you understand the metrics, that's
Yeah.
what your decision should be driven by at this point, the last decision, the last two decisions. How is our decision going to do these various things? Will it impact the six winning metrics? Because they want to be in the
Yes.
best position for each one of those six metrics. And everything they do to improve one metric will hurt them in another metric. And so, how close are they, and how do they want to deploy their?
That's great because you just got to keep reminding there's not going to be a decision six, so don't plan for the future at this point. Yeah, exactly. You don't have to invest in a plan for two more decisions from now because yeah, that's interesting.
Yeah, it'll
Very
slow
cool.
down, particularly if you don't need. If a team says, you know what, we're only going to sell 100 family cars, but we've got inventory and we've got the ability to make inventory plus capacity 140 cars. There's no reason you'd make those extra 40 cars.
Yes,
So what
yes,
you
yes.
do is you say, I'm not doing depreciation in my plant. Capacity is going to go down.
Yep.
Some of the employees' productivity is going to slow down a little bit, but then you say, I'm going to make, instead of making full blown, however many cars you can make, only make 35 cars. They're going to be expensive cars, but make
Yeah.
sure you sell them.
Yes, yeah. Fire sale, expensive cars, but not a lot of them. That's great. I love it.
Here's one other trick. You can decide how you want to talk about this with your students.
Sure.
The game doesn't categorize inventory based on where the sliders were when you made the car. Okay. And otherwise it'd be way too complicated.
Oh
How
yeah,
many
sure.
cars do you have left over from decision three? And if every decision you're tweaking your sliders, you're making essentially different cars.
Oh, that's right.
Okay.
Interesting.
So
Yeah.
what the game does is, as long as you make a car, all of your inventory inherits the last characteristics that you've
Of
set up.
those sliders. Oh, because they can't go back and mix them all. Oh, that's cool. Yeah.
So it's not realistic. And I tell my
Yeah.
students, you made vinyl seats in your cars for 10 years and you made one car with leather
And now
seats,
they're
all your
all
car
leather.
is leather seats. And so take and just floorboard, firewall your CO2 number, and no matter what car you however many cars and only make one. If you only make one car, it'll be really expensive car, but you're only making one car. But that characteristic will inure to all of your
All
inventory.
the rest of the inventory. Oh, is that amazing? That is so cool.
So it's not realistic, but it's a game. It's if you want to game it now, the models you don't automatically roll out with 27 models the next year. So that one's not so
Sure,
much.
sure.
But the metrics that have to do with like if you want to make your cars roomier, faster, more eco-friendly, and you're only going to make one or two cars, who cares? Like just
Wow.
floorboard, firewall.
I totally missed that because I was looking at cannibalization. I was saying, well, it doesn't really cross over. But I didn't think of backward integration of cannibalization of making something better. That's a fascinating. That is really
So
interesting.
if you've got a team with more enough inventory that they don't need to make any more cars,
Yeah.
and they're
Yeah.
in last or second to last place because they
Sure.
couldn't control their inventory, then maybe they want to make one car that's a 10 on every 10 on
Yes.
just make one.
And then all of it will
All
be
their
that
inventory
characteristic.
suddenly becomes really sexy
Oh my gosh.
and it gives them the chance. Now,
That is huge.
as long as you tell your whole class this, then
Oh
they
yeah,
can
no, everybody will
determine,
know. I never tell anything to one team or they'd kill
yeah,
me.
yeah.
Yeah.
And so
Wow.
otherwise the game it would be too complicated. You wouldn't know
Sure.
which car and
Oh yeah,
if
it'd have to track so much. I never thought of that, but that makes a lot of sense because every iteration, every model, every type kind of wait a minute, I can't go change all that. I'll need a supercomputer.
so
Interesting.
that's a trick. And I always tell all my teams, and I don't tell them that until the very end. It's not a winning
Sure.
strategy, by the way.
Oh no, for
There's no
sure.
team that could go in this and say, I'm going to gamify, I'm going to leverage this one quirk of the game to win.
Right, right, right. No,
But
that's not going to happen.
at the end, it may be
You can move
enough
up a spot. Yeah.
to move or flip a couple of those positions,
Yeah.
right?
Neat. That is very cool. I can think of a couple teams that are going to love that, and a couple teams that are going to say, "No, don't come after me."
Yeah,
Interesting.
and
Interesting.
so if it's going to help with their gross sales, particularly if they have a ton of inventory. If they make one
Yeah.
really expensive car, they've been sitting on inventory. If they drop their price a little bit, they're probably going to sell all their cars,
Oh
which is
yeah.
going to make their revenue
Absolutely.
go up. It'll make their balance sheet go down. They don't have that much cost associated
Yeah, and
with
they're
the
not throwing
production.
that capex and depreciation anymore on the final one, so they've
It'll
got
help
all
their
to put it into. Yeah.
it'll help their income statement
Wow.
tremendously. And so that's how they're trying to think about it.
Yeah, I'm glad you said that because the kind of recapping all of the supply and demand stuff, it's really different in that final decision because you're not investing for the future. I mean, it's not realistic because you would if you're leaving the company to your other humans that are coming in.
But
But in this case, it really does pay to go to the demand side and see what you can do with the six indicators because that's kind of your last hurrah kind of thing, and that will be interesting. That's
and
a great
Tommy,
idea.
we're also rewarding those students that are clever enough to figure out which decisions help which one of those. And
Oh yeah,
this is kind of the big leap out. If you're good enough to understand which decisions and how they impact each one of those metrics,
sure.
that's the next level. That's MBA level analysis.
Yes. Oh
Now,
yeah.
okay, play
Yeah.
the game a little bit, but now's the time you want to play that game because you are trying to leverage every angle you have so that on your financial statements you look as strong as possible. Those
Yeah.
are
Yeah. Get your P&L up and get the balance sheet down and tight where you've got as much cash as you can have without having to throw any of it at the future. That is really interesting. Wow, very cool. Well, thank you very much. Now I'm really glad that I talked to you because they also are looking for, I call it an Easter egg or a cheat or something, or that Paul's going to give us a tip from all of his teams. And that's a really big one for the last decision. So I'll get this rendered and put out there and let them know that they're going to, by Saturday, they have something else to think about here. So what is today? Tuesday? Yeah, they've got time to do it. So
Yeah, they've got time to do it.
awesome.
And then
Awesome.
as it relates to, are you still recording? And cut the
Yeah, let
recording.
me stop it here. Let me stop. Where is recording? All right, summary, stop recording, hit the